There are two broad categories of investments. We have productive assets and we have speculative assets. Productive assets are investments that derive value from their ability to generate returns. For example, if you own real estate, if you have an apartment or a house or even a factory or office space, you can rent it out and collect rental income. If you own the shares of businesses that generate profits from providing goods and services, these are also productive assets. In the long run, companies that are consistently profitable, they tend to increase in value, and some of them even pay regular dividends. For productive assets, the value of these investments is primarily driven by the returns that it can generate. On the other hand, we have speculative assets. Now, these are investments that derive their value primarily from market demand and supply. For many such investments, it's actually very difficult, if not impossible, to determine how much they are actually worth because they themselves do not generate returns. So speculative assets include things such as the commodities, such as gold, oil, grains, etc. We also have currency such as the US dollar, the British pound, euro, or the Japanese yen. Artwork such as sculptures and paintings, these are also speculative assets because their value is derived from how much people are willing to pay for them. And of course, digital assets such as cryptocurrencies and non-fungible tokens. The value of assets such as these, they are primarily driven by market demand and supply and how much the market is willing to pay for them. The prices are very speculative because it largely depends on perception of where demand and supply can go in the short to medium term future. For example, we have seen how volatile oil prices have been in recent years, and we have also seen how this is primarily driven by demand and supply factors. So these here are some examples of productive and speculative assets. Of course, there are going to be some things that will straddle the line between the two. For example, if you own some artworks in and of themselves are speculative assets. But you could potentially generate a return by selling admission tickets to view your artworks. Another example would be meme stocks. Some people would say that, they are, shares of businesses, so they are supposedly productive assets. However, if we take a closer look, we will see that actually these are businesses that have been losing money for, a pretty long period of time. And people were only speculating on the price. They were just buying to, push up the price, or because they had an idea that everybody was going to buy to push up the price, only to sell and to dump the stock to make a quick buck. So if you were buying shares of the meme stocks such as like AMC and GameStop and like Revlon during these periods, you were basically speculating on the price as well. Sure, it can look like an opportunity to make a lot of money, but you could also get wiped out very easily if you had speculated on the wrong stock at the wrong time. So bear in mind that speculating in meme stocks is actually a very, very risky investment. Of course, all investments have risk, but speculative assets are way more risky than productive assets because speculative assets derive their value purely from demand and supply factors and psychological reactions from people who are responding to their perception of these demand and supply factors. But that's not to say that they have no place in a portfolio. If you still want to invest in speculative assets, make sure you are conscious and very aware of your risk appetite and allocate accordingly to what you are ready and prepared to risk. Because we have to bear in mind that with speculative assets, there's a very, very high chance that we might lose everything that we invest in it. So that's it for today's video. Like, comment, subscribe. If you found it to be helpful, I'll see you in the next one.